up, guys? Welcome back to Money So Tasty. Let's all get a taste of capital. Some folks have been requesting that we talk more about the registered accounts in Canada. For example, the RRSP. You can get tax shelter growth and you also get a big tax refund. So should I invest in something like that? And before this, I found out a very interesting scenario. So many people probably heard about the RRSP. Some people even got an RRSP account because their friends or coworkers have it, or because when they go to the bank, they were strongly suggested to get an RRSP account. But they don't know exactly what it does, exactly how they're going to benefit from this RRSP account, and exactly how to use it to best maximize the tax advantages within the RRSP. Now, the government only give us so much benefits, so let's make sure we use them to the maximum advantage. Now, how you use the RRSP from our experiences can mean a huge difference. It could easily mean a 20% to a 30% tax reduction, easily a few $1,000s or even over $10,000, $20,000 of taxes. So today we're going to talk about what's up with RRSP. Now, there's a lot going on with RRSP, so we're going to slowly build it up in the next couple of videos. So today we're going to start with the basics. It's great for beginners. You're going to have a very good understanding of the RRSP after watching this video. It's also great for the seasoned investor. It's a good refresher. You probably will find out something that you didn't know before. If you know everything about RRSP, please comment below and share with us your unique techniques or tricks with RRSP. Okay, so today we're going to talk about three things. Number one, what is RRSP? How does it work? And we're going to talk a little bit about the Canadian taxation system as well. Number two, what are the advantages of RRSP? It's not just as simple as getting a big tax refund. And finally, number three, where you can open an RRSP account. In our next video, we're going to talk about the top 6 common misconceptions relating to RRSP, or the top 6 rookie mistakes relating to RRSP. Okay, if this is your first time to our channel, this channel is all about sharing on your journey to financial freedom. What are the money-making and investing mindset you need to have, and what are the common pitfalls you want to avoid? If you want to become financially free with us, then make sure you give this video a thumbs up, subscribe to this channel, and open your little notification so you will never miss another pie in the sky. Okay, number one, what is RRSP and how does it work? RRSP stands for Registered Retirement Savings Plan. It's basically the government's way of saying you have to build up a certain capital for your retirement. We can't provide for you because the older we get, the more expensive it is for the government to provide us, right? Healthcare, etc. So the government says, why don't we do this RRSP? Now, in order to talk about how RRSP works, we need to talk about the Canadian tax system. Now, in your GIC episode, we talked more about how Canadian tax system work. What is your GIC tax rate, right? When are you going to pay GIC taxes? So go ahead, take a look if you haven't got a chance. Now we'll do a quick review. The Canadian personal income taxes is a tiered tax system, or they call it tax brackets, which means when you're first making a lower income, you get taxed at a lower tax rate. As your income goes higher, you get taxed at a higher tax rate. Let's take a look at this chart. This is Ontario, by the way, but it's a similar idea across other provinces. For example, for the first $44,000, you get taxed at 20%. From $44,000 to $48,000, you get taxed at 24%. And then it slowly goes up as you're earning more income. So at over $220,000, you're paying a tax rate of 53%, which is more than half. That's why a lot of fellows have been saying, after I hit a certain level of income, I lose that motivation to earning more income, to get a raise, to get a bonus, or earning some other forms of income such as real estate rental income. Because I only get to keep less than half of that and paying more to the government itself. So RRSP can help you alleviate that. Let's take a look how RRSP works. So basically RRSP have two distinct advantages. One is a tax deferral into the future. It's basically a switch. You're switching your income today to the future, so you get taxed in the future. And number two is you get the tax deferral growth. So let's say you're earning between $97,000 to $150,000. You fall into this big bracket. It's a very common bracket. Many people earn within this bracket. So let's say your income for this year is $110,000, and you decide to put $10,000 into RSP. That essentially means your income for this year is $100,000. That $10,000 you put into RSP, you can invest it. When you take it out, you get taxed at that time. Some people might be wondering, why do I need to tax when I take it out? Because that $10,000 you never got taxed before. So usually you get taxed at least once, right? You either get taxed today or you get taxed later on. So RSP is a mechanism for you to get taxed later on. You transfer that $10,000 of income into the future. Okay, so now we know RSP helps you defer taxes into the future. Many fellows are probably wondering, but why should I do it? I either get taxed now or later, but I get taxed anyway, so why should I get this RSP account? Now, the reason why you might want to do RSP is because of the tax rate differential. What I mean by that? So let's say right now you're earning a lot of income. You're earning $110,000, which puts you into the bracket of 43%. When you retire 20, 30 years down the road, you probably don't earn that much income. You probably don't have that much income because you already got most of the things taken care of. You got your house, you paid down your mortgage, etc. You might just need 50,000 or 60,000 of income from different sources. So from that time, if you look at the bracket, 50,000 to 60,000, it roughly puts you at a 30% tax rate. Which means that $10,000, if you get taxed today, it's $10,000 times your marginal tax rate of 43% equals $4,300 of taxes. If you pay later on when you retire and you withdraw that money out, the same $10,000 only pays $10,000 times 30% of the marginal tax rate, which is $3,000 of taxes. So you see, you saved the difference between $4,300 to $3,000. And that is because the tax differential. You're paying at 43% taxes because you're earning a higher income in your working years, and you probably get paid or get charged a 30% taxes when you retire because you don't have as much income. Now, a benefit relating to this is the RSP will help you move to the next tax bracket. So now you're at 43%. But let's say you contribute into some RSPs so that your income falls below $97,000. So let's say you contributed $15,000, for example, which means you will move into the next tax bracket of 37%. Now that tax bracket will dictate your all sorts of other income, such as your rental income, your investment income, your interest income, etc. So when you're earning those income, you get taxed at a lower rate as well. So sometimes the RSP will help you to get into that lower tax bracket. Okay, now let's talk about number 2, which is the tax deferral growth or tax sheltered growth inside the RSP account. So once you put your money into the RSP, you can invest in stocks, bonds, mutual funds, etc. And those investments can grow tax sheltered for the next 10, 20, 30 years, which means you're growing at a much faster rate compared to, let's say, a non-registered account. We talk about that in the GIC, which means you probably need to pay taxes on an annual basis, which makes the investment much, much slower because you get taxed every year. Now, some people are probably saying, when I take it out, I need to pay taxes anyway. But it's a different mechanism because in between, in that 10, 20, 30 years, you're getting the tax shelter growth, which can accelerate the growth of all your investment. Okay, now let's talk about a bonus advantage of RSP. RSP usually offer you creditor protection, which means if you owe somebody money or if somebody sues you and the court says you have to pay this person, if you have cash, then you pay them cash. If you have other forms of assets, you might need to liquidate those assets to compensate, to pay back to that person. But usually they can't touch whatever is inside your RSP. Essentially, the government says you can touch all his other assets, but don't touch his RSP because his RSP is for retirement. And if he doesn't have that money for retirement, then the government, we have to provide for this person and we don't want to do that. So just don't touch his RSP money. Okay, now you know the advantages with RSP. You probably want to say, how much could I put into the RSP? Well, RSP is a registered account, which means it's attached to your SIN number, it's attached to your name, and you can't put too much money into it. The government doesn't want you to put too much money into a tax sheltered investment and defer too much of your taxes. So there is a limit. So So take a look at this chart. The limit is usually 18% of your previous year's earned income. And by earned income, it doesn't mean all sources of income. It doesn't mean a lot of your investment income, for example. The earned income includes your T4, which is your employment income or salary, for example. Your net self-employed income, if you're self-employed. Net means after you deducting all the costs. And your net rental income, also after you deduct all the rental expenses. So all those income together counts as your earned income, and you can put towards 18% of that. And for each year, there is an upper bound as well. So for 2020, that number is $27,230. For 2021, it's $27,830. So you see it goes up a little bit every year according to the inflation. So for example, let's say your earned income for 2019 is $100,000. So the maximum you can put in is 18% of that, which is $18,000. If you make $200,000 of earned income, then your 18% of that is $36,000. But you can't put in $36,000. You can only put in the maximum, which is $27,230. Now the RRSP limit is cumulative, which means if you have worked last year but you didn't put any money into your RRSP, then this year that room gets carried forward and you have that room. It doesn't expire. But obviously, the sooner you put into your RRSP, it means the longer those investments stay tax sheltered in your RRSP. You don't want to put your money into your RRSP at age 50 or age 60 and then take it out at 70. It doesn't give you that much time. And by the way, if you have any company pension plan or group RRSP, those get taken into account for your RRSP room as well. So if you want to open your own RRSP in addition to that, they will take into account all your contribution room and to see how much you have left. Okay, now let's talk about how you can find out your RRSP limit. There are basically three ways. One, you can take a look at your notice of assessment. So every year you file your taxes, CRA will mail you the notice of assessment. Yeah, mail you. Very traditional. And you can find out your RRSP room on that notice of assessment. And number two is you can log on to the CRA website, My Account, register, and after you log in, you can see your RRSP information. You can see your TFSA information there. They will tell you your total RRSP limit, how much you have put in this year, and so how much you can still put in from now on. And the third way to find out is to give CRA a call, especially if you have some other related questions. I put the phone number here for your convenience. You press 3 first, and you press 1, and that you can skip a whole lot of automated messages. Okay, part 3. Now you know the benefits of RRSP, how it works, how much you can put in. Let's talk about how you can open up an RRSP account. So there are basically 4 different places you can go. Number 1 is a bank. Number 2 is an insurance company. Number 3 is an investment firm or an asset management firm like us. Number 4, you can go to an online brokerage. And the type of investment product differs depending on where you want to go. Usually when you go to the bank, for example, RBC TD, you can invest in GIC like we talked about before, or you can choose a mutual fund. Usually it's branded under the bank as well. So if you go to RBC, they'll give you most likely an RBC mutual fund. If you go to TD, they'll give you most likely a TD mutual fund. If you go to the insurance company, it's very similar, such as Sun Life or Manulife. But in addition to those, they can give you some of the insurance featured investment products, such as segregated funds. And if you go to an investment company or an asset management firm, what we do is we can build you a portfolio which can consist of different managers such as RBC, TD, Sun Life, Manulife. But in addition to that, other than mutual fund and GIC, we can also provide you a diversified portfolio such as private equity and other alternative investments. So you get a little bit more choices. And lastly, when you go to an online brokerage, you can go to a bank-affiliated brokerage, such as Scotia iTrade, or you can go to an independent one, such as Questrade. And mostly people go there to buy individual stocks or ETFs. Okay, now you know the basics with RRSP. Do you think it's beneficial for you? Do you think it's beneficial for your unique circumstances? Are you going to open an RRSP account? Leave your comments below. If you have any questions relating to RRSP or any other registered accounts, or if you would like us to cover certain other topics in the future, make sure you leave a comment below and we'll try to get back to you as soon as we can. If you have a specific question for your unique circumstances, if you want to open an RRSP account, or if you want to build a customized asset management plan for yourself or your corporation, feel free to reach out to us. We'll put our contact information in the bottom of the description section. On our journey to financial freedom, we need to have some good habits. So why don't we start with the following 3 little habits. If you haven't subscribed, make sure you subscribe to our channel so you will never miss another pie in the sky. In our next video, we'll talk about the top 6 common misconceptions or top 6 rookie mistakes relating to RRSP. Make sure to give this video a thumbs up and share this video to your friends and families. Money so tasty, retire so early. Until next time, remember, you're freer than you think.